Hi guys and welcome to Price Action Trading School. Today it's Wednesday, always the same time, Price Action Trading School, and today's class is about best Forex pairs to trade. So I will cover my favorite Forex pairs and which session you will be trading these pairs, which pairs you should be focused, and of course I will teach you the correct appliance of the ATR indicator, the ATR average true range indicator that will actually give you the best possible range for the forecasted range for the currency. So today this will be an educational class, and one more to go before we start to apply fundamental and technical principles in the trading. And I will go from I think it's in 2 weeks. We will start with fundamental analysis, then we will go to technical analysis, and then we will cover all major aspects of trading, including price action indicators, harmonic patterns, Wolfway patterns, and of course, by the end of the price action trading school, as I promised, all traders who fulfill a certain requirement will get a free template from us, so you will be able to practice and to actually trade with a price action trading school template. But of course we go step by step. Today's session is best forex pairs to trade, and we can start in a minute. This is price action trading school revised. My name is Nenad, and price action trading school consists of 4 pillars: price action trading, market analysis, risk management, and of course trading psychology. All pillars are very important, and if one pillar amongst these 4 pillars is broken, everything might fall apart. So you always need to be focused on right things and principles, including these 4 pillars. So let's cut it to the chase. Session and pairs today. So we will cover, of course, which pairs and in which sessions. As we already covered in last session, in last class, there are 4 major sessions. I mean 3 major sessions, but others are just minor sessions and sub sessions of the major sessions. We have New York, London, Tokyo, and between New York and Tokyo there is Sydney, Wellington session, and between Asian session, Tokyo session, and London there is Frankfurt Open. So basically we are focused on New York, London, and Tokyo session. Sydney session and Wellington session are out of the question. Basically the only thing that can move is usually New Zealand dollar, but it's only restricted movement on some news or something, because the range of the New Zealand dollar is very small. But we will go with that in details right away. So first of all, you should be focused on trending pairs. That's very important, guys. Don't forget, I always repeat the same thing, and that is the absolute truth, guys. You need to know that in forex trading, in forex market, trend is your friend. I will also explain why, and the basic thing is trend is your friend because trend is shaped by a shark. Shark is usually big banks, central funds, hedge funds, central banks, all those market movers, okay, all those institutions that are moving the market. And if you are a fish, you need to follow the shark. I always compare it to the forex market. If you go and swim versus the shark, you will be eaten. So you need to follow the shark, and that is why I'm saying always trend is your friend. Also, we need to have a fundamental alignment. When technical analysis aligns with fundamental analysis, usually that is the best way to actually go with trading. And the best thing is to trade when fundamental principles are aligned with technical principles. We also have a basket trading that I will cover. I will show you how you can use correlation in order to actually trade the currency basket. And you need to focus on multiple time frames in trend direction. The MTF time frames are crucial to spotting a good trend, a possibly good movement. And of course, the bigger the trend is, it will give you the better it will give you the better result, but you always need to focus on the ATR, average true range, especially if you're trading on intraday time frames. ATR is of utmost importance. I have heard many times in my life, people are always asking me, Nenad, if you take, why do you take, for example, 20 pips only and not 50 pips? Because, guys, if I trade, for example, if I trade the New Zealand dollar, okay, I cannot take more than 20, 30 pips if the average true range for that pair has been, let's say, 50 pips. 50 pips is the maximum, really. And if I take a GBP trade, for example, it will be much more. For example, 2 days ago with my Telegram channel group, we had an excellent GBP dollar trade that yielded more than 50 pips. But you know, it's like it's GBP dollar. It's not like you're trading the Australian dollar or New Zealand dollar slow moving pairs. So the ATR is very important. Without the ATR, you simply don't know where to take profits, how many pips you should get, and everything is much, much harder without the ATR. Now let's get back to the shark. As I always said, shark is smart money. Okay, this big shark is the market, and you are the fish. Now these fish that are actually that got into the shark jaws are not smart, and they probably were going counter the current. They were swimming the opposite the shark direction. It's not smart, because if you get in a way of a shark, you will get eaten. It's same in the market. If you try to spot levels by your own and you think the price is going up, now it's time to short it. It doesn't go that way. If the price, guys, is going up, okay, if the price is going up, you will be waiting for a buying opportunity, okay? So if the price is going up, okay, you need to wait for a drop and then buy. If the price is dropping, you need to wait for a spike up and then sell. You cannot just press buy and sell at random levels. And you need to know that the best money is made by taking trend trades. At least this is how I do. And my best results are always and have always been when I actually went in a trend direction. Okay, not in counter current, but actually in a trend direction. If the price is going up, I will be waiting for a pullback and then I will buy. If the price is dropping, I will be waiting for a rally and then sell it. That is how money is made in Forex market. Going counter the trend or buying at the top or selling at the bottom is a nonsense. And if you start doing that, you will lose your money. It's the fact. Also, guys, you need to know that smart money shapes up the trend, okay? Big banks, central banks, hedge fund managers, all those money movers actually shape up the trend. And if the trend is to the upside, you need to spot it. You need to know, you need to watch higher time frames. And you know that on lower time frames, when price is dropping, you will have the opportunity to go long. Or when price is going down on higher time frames, on lower time frames, you will wait for retracement and then sell. It's called pullback trading, okay? And many times you will see that there is a range. You need to avoid the range. Okay, range play avoidance is one of the skills that you should be developing, you should be working on, because if you really manage to actually avoid a range play, then you will be much better in picking up your entries, especially trend entries. And when you see a zigzag pattern, you know what a zigzag, I'm not talking about the indicator, I'm talking about zigzag. Zigzag is when price is making a zigzag like this. It means that the price is trending, and each zigzag can be used for buying into dip or selling on rally, depending on, of course, on a trend. But you need to have a confluence of technical factors that will give you a buy or sell. That is what we will cover in one of our future classes. Okay, so let's get back to the main subject. Which pairs to trade? Okay, which session? So first we will start with London session. Cheers, guys. Okay, London session. Of course, London session is usually the most volatile, but I think that not just London, but London and New York session overlap. Remember, last class, it was on Wednesday, not this Wednesday, but previous Wednesday, we were talking about best sessions to trade. Now, remember, guys, London New York overlap is usually the most volatile, and usually that is when biggest movements are made. Now, you need to focus also on London session itself, because London session will be probably one of the first sessions to trade if you live in Europe, or even if you don't live in Europe. You need to know that London session is much better than trading solely Tokyo session, or I don't want to mention it, New Zealand session, Wellington and Sydney, because during Wellington and Sydney there is hardly any movement. It's just futile. Uh, so during London session, focus on major pairs, guys, especially if you are a newbie trader, a novice trader. Try to focus on euro dollar, pound dollar, dollar yen, dollar Swissy. Those are pairs that you should be watching during London session. Of course, for more experienced traders, there will be trading opportunities, of course, on minor crosses such as euro CAD or euro GBP. But these pairs are very good for London session. I don't need to mention GBPN, because GBPN is omnipresent in every session. London session, London, New York overlap, New York alone, and Tokyo. So GBPN is very volatile, very good pair to trade, and you should be focused also on that. But especially if you're a novice trader, if you're a newbie trader, euro dollar, pound dollar, dollar yen, dollar Swiss, those are pairs that will give you probably much more chance to trade than some minor crosses such as New Zealand yen or euro CAD during the London session. If you want to take London session at yen pairs during London session, you can focus on euro yen, GBP dollar yen. Out of all these three, you need to know that the dollar yen is usually the slowest, and dollar yen usually reacts the best to some news. But out of all three, dollar yen is the slowest. You need to know that. It's important for you to master that. Okay, dollar yen is the slowest, but again, euro yen and GBP yen are pairs that you should be focused also on euro session, and GBP yen is the fastest out of all three pairs, and we will see it compare the ATR. Now, New York session. During New York session, guys, you can trade, again, similar things and similar pairs that you traded in London session. And you can trade euro dollar, pound dollar, dollar yen, dollar Swissy, including CAD pairs, such as dollar CAD, euro CAD, New Zealand dollar CAD, okay? And, of course, GBPN. As I said, the GBPN is omnipresent in each session. Hi, everyone. I still see that people are coming. David and Ali, hi. So, euro dollar, pound dollar, dollar yen, dollar Swissy, dollar CAD, GBPN. You can trade euro CAD, New Zealand dollar CAD, those CAD crosses. But I personally don't like it simply because I know that much better trades can be made with other crosses than with, let's say, euro CAD, that I really not a big fan of, or New Zealand dollar CAD. Now, again, I will repeat what is very important. First 3 hours of each major session are very, very important. First 3 hours of each major session are very volatile. London, the first 3 hours. London, New York, New York. Tokyo session also. The first 3 hours. And at the top of the hour, last 5 minutes and first 5 minutes are usually the most volatile. You need to know that. Okay. Now, what is with Asian session? With Asian session, you're focused on New Zealand dollar, Australian dollar, again, yen. You might like to trade New Zealand dollar CAD, euro, Australian dollar, but those are not ideal pairs. Even during the London, New York overlap, those pairs are not ideal. So try to go with Australian dollar, dollar, New Zealand dollar, dollar, euro, Japanese yen, dollar, Japanese yen, Japanese GBP yen. So try to combine these currencies with major crosses, not focusing on exotics. So if you want to take trades during Asian session, New Zealand dollar, the Australian dollar, the yen, out of all these three major currencies, I think dollar yen, euro yen, euro New Zealand, okay, euro New Zealand are most volatile. And if you are on the correct side of the market, it will give you most pips, especially euro New Zealand. I forgot to put it there, but now I'm saying, guys, focus also on euro New Zealand, especially during Tokyo session. You can trade euro New Zealand even during London and New York successfully, but sometimes it will explode during the Asian session. Need to know, guys, for all of you Pacific traders and who are watching the webinar from other parts of the world, especially Australia, have in mind, guys, that Australian dollar reacts heavily to equities movements, especially with ASX, Australian stock market, Nikkei, of course, Shanghai Stock Exchange, and Hang Seng Index. These indices will react heavily on some important news, Chinese data, the Australian data, and the Australian dollar will be very, very affected. So you need to know that these indices have a big, big influence also in Forex market and vice versa. It's called intermarket correlations. Now, which pairs to trade, guys? London, you can also trade all pairs. I said major pairs, okay? We already saw this, okay? But it's important, guys, that you also watch this correlation table, okay? So correlation table, if you go here, for example, with XC, they have correlation matrix. You put it there, you insert pairs and watch the table. I promised last time that I will tell you what does this all mean. So let me tell you that the bigger the correlation, the bigger the number. When you see a red rectangle like here, it means that correlation is extremely strong in the same way. So CAD yen and dollar yen go in the same way. Euro dollar, for example, dollar yen, this is intraday correlation. 1 hour, 200 bars. So on intraday time frames. Now euro dollar and dollar yen are merely going in the same direction. For example, euro New Zealand and dollar yen are going almost completely in the opposite direction. And when you see orange, it means that the correlation is strong, but not the strongest. With the green, correlation is merely there, and with blue, correlation is okay, not so bad, not so big. It's, as we say in the best case, mediocre. But things start to change really drastically when correlation is above 70. So you will see that, for example, the Australian dollar and Australian dollar CAD are going completely plus 99 correlation. When you see minus 95, it means that correlation is strong, but it's negative correlation. So when Euro Zealand is going up, the Australian dollar is going down. So this is, guys, very important for you if you want to trade multiple pairs during different sessions. Always try to spot correlation table. You see Euro Yen, it has great correlation with CAD Yen, very good correlation with Euro Dollar, excellent with Dollar Yen, but completely inverse with Euro New Zealand. You might ask how it's possible. Both are having Euro as the base currency. In this case, Euro Yen, Euro is base currency, Yen is quoted currency, and in the case of Euro New Zealand, Euro is a base currency, New Zealand dollar is quoted currency. That's because Japanese Yen and New Zealand are totally opposite, and Euro is simply Euro Yen and Euro New Zealand are going in the opposite direction, no matter they have Euro as the base currency. Because you see, during Asian session, you can trade Euro Yen and Euro New Zealand pretty much successfully, but do not think that if the base currency is the same, they will move in the same direction. So for basket trading, guys, always try to watch similarly correlated pairs. So for example, you want to go CAD Yen long. Okay, with CAD Yen, you can go dollar Yen long, Australian dollar long, the Australian dollar CAD, because they're having the big correlation. And if you spot a good technical confluence with Australian dollar CAD, for example, and Australian dollar, and you're long CAD Yen, why not add more positions? So for basket trading, focus not just on the same currencies, but also focus on correlation matrix. It's very important, and I just don't know why people are not using correlation table to the bigger extent. The last thing, guys, that is very important is this ATR indicator. Okay, I will pull the chart now of my ATR here. If you go to indicators list here, this is our ECS ATR Pro indicator. Our members have it. If you want to become our member, you can always sign up for ECS Live. And of course, if you sign up with any of our trusted brokers, guys, you will definitely get this indicator for free. It's a very, very good indicator, guys. And I need to tell you that I will show you now. Just give me a few seconds. I will pull up the window here of our website. You can get this indicator for free. Of course, you need to send us the proof that you signed up with one of our trusted brokers. Here is the list. Okay, and the ATR indicator will be, and it's not just one present. You will receive more presents, guys. So this is it. You see on our website. And finally, this is very important, guys, this ATR. If you put ATR period as 14 and leave this as it is, it will show you the average true range of this current pair, current chart for the last 14 days. So, for example, you see that the GBP dollar has the ATR of 115. So it means, you see, guys, it means that price is volatile, really. And this is the low projection low, and this is projection high. And these dotted lines represent each day new levels will print out. So each day the forecasted high and low will be printed out. Whenever the high or low is broken, this yellow line will be at top, or this yellow line will be below here, this dotted line. It means that the price is overshooting the ATR, and there is possibly there is time for a counter trend trade, or at least exit your trades. Then you see dollar yen, it has been overshot. This dotted line here, you see yellow went above. So when the price probably hit this level here, the price overshot, and you see the price now is going in the opposite direction. And the average true range of is 67, and you see it's 87 today. So the ATR was overshot by 20 pips. How to use this ATR indicator? Not just for this, for spotting potential counter trends or targets, but also, guys, treat it as a volatility gauge indicator. It's 67 pips. It means that volatility is not that high. Now euro dollar 78. It's okay. It's mediocre. Nothing great, nothing bad. But if you go to, for example, we will see on the, let's see some GBP cross. For example, GBP CAD, you see 153. So this is fast moving pair. GBPN 138, very, very fast, very big range. I also tend to watch, not trading it that extensively, but for example, the GBP New Zealand. Let me see if I have it here. Yeah, Euro New Zealand also. Look at this, 137. So this is a big range. Also GBP Australian dollar, 163. You see a lot of movement in these crosses. Let me see if I have, yeah, GBP New Zealand, 180. This has been one of the fastest pairs in Forex market, and the nickname for the GBP New Zealand is the Beast. Yeah, and as David is saying, I use some correlation table to make excellent trade, genius trades on ECS Live. Yes, thank you, David. I will now I will take a screenshot here because you're completely right. Indeed, this is very, very important. Correlation table is very, very important, guys. Yeah, ATR, one more thing, guys. Today's ATR was 130. Projected ATR was 180. You see the price is going down. If it continues dropping, this is the chance to go long. If it spikes up, this will be the chance to go down. So the ATR gives you values based on its calculation for the last 14 days. The bigger the number here is ATR 14, the stronger moving pair it is. So you will see mostly that these Pacific crosses or miners like GBP Ori, Euro New Zealand, GBP New Zealand, they will have a huge movement. So it's important that you understand that principle. If everything is clear, guys, we can call it a day. If you have any other questions, please ask me. As I say, I'm very fond of this ATR indicator. You can open the account again with one of our trusted brokers, and then I will send you not just the indicator, but also you will see some other freebies. But as part of ECS Live membership, you always get this indicator with my systems. This is one of the best indicators to actually spot the forecasted high and low. Thomas is asking, can you show an example of correlation table how to spot a trade? For example, I just put a correlation, correlation matrix, not trader, and I watch it. So I cannot do it with this. But for example, if I am long on euro dollar and I see that euro New Zealand is also signaling a possible long, I will not go long. Because on euro dollar, if I'm long, it means that I have taken my trade already. But here with your euro New Zealand, it says that correlation is minus 65. It means that they're going the opposite way. So if I'm long on euro dollar and I have, for example, a long signal on euro New Zealand, I will not take a long signal on euro New Zealand because these pairs are going in the opposite direction. So you need to spot correlation table not to give you a trade, but to actually, if you want to add to your trades different pairs, then you need to use correlation table to see how the current pair that you are trading deals with, let's say, other pair that you might open. And the bigger the correlation that is, the higher the number will be here. Yeah, ATR indices, David is saying that it's best index that exists for intraday trading, clear targets, stop losses, and it gives you a clear idea how the market is going to move throughout the day. Indeed, I also use my Camarilla and Marimat, but it's different story, guys. Now you need to focus on not just forecasted high-low, but actually, guys, if you want to take 20 pips on GBP New Zealand, don't take 20 pips, take much more. Because if you want to take 20 pips on a trade and be happy, that's the Australian dollar. Look at this, 62 pips only for the last 14 days. If you take 20 pips on the Australian dollar, you took the third of its ATR, so it's great. And watch this, on Euro New Zealand, it's 137. So you need to take at least 40 pips, guys. So that is why I'm saying it's important. No one can tell you take 20 or 30 pips. It's nonsense. 95% of systems out there that I was reading about, they say this system trades 20 pips on average. For example, you get euro dollar, pound dollar, and other crosses. There is no 20 pips. Each pair has its own range. 20 pips in euro dollar is not the same 20 pips in GBP New Zealand, nor 30 pips in the Australian dollar is the same as 30 pips on GBP Australian dollar. Some pairs are slower, some pairs are faster. You need to remember that, guys. Very, very good indicator. And just as I was saying at the beginning, focus on major pairs for starters. And then when you're getting, as long as you're getting good trade with major pairs, you should not be changing anything. If you still want to make some other trade that is not major pairs, go with minor crosses, as I explained at the beginning of the webinar. But you need to know which session. That is why this is also important. It's not just pick, buy, and sell. Give me the system and then I will make money. It doesn't go like that. We need to cover, as I'm always saying, all important aspects of trading. And finding the best pairs and during sessions, different sessions is one of the things that you should be focused on. Okay, guys, if everything is clear, I don't see any questions. Yeah, David is asking for the indicator. Yeah, you're an ECS Live member, no problems. We'll send it right now after the webinar. And guys, if you have any questions now, just go ahead and ask me. If not, I will assume that everything is clear. And I will see you on Monday and Wednesday sessions. Sign up. Do not forget to sign up. I'm here to help you out and to teach you how to trade better. Always yours, guys. Cheers. Love you. Trade safe. Talk to you soon.